Bitcoin is the best performing asset class over the past 10 years. It's simple. On average, every year, the price of Bitcoin doubles. For the people that managed to buy Bitcoin in 2020 or in 2022 and held on until today, this asset has probably made them filthy rich. As a matter of fact, I'm sure you've heard all about it. There's either someone in your professional circle or in your social circle that owns crypto. And to be honest, that tends to be the case when the price of an asset moves up so drastically like this. Right now, Bitcoin and a lot of other cryptos are all over the news since a lot of crypto investors were backing Trump and obviously he won the election. And he seems to be assigning a lot of people to positions of power that are favorable to this industry. The result is that Bitcoin is rallying quite a bit, and the price of Bitcoin has reached an all time high and almost broken the mythical barrier of $100,000. Despite all of that, Bitcoin is not something that I find attractive from an investment perspective. My aim in this video is not to discredit Bitcoin or cryptocurrencies as an asset class. It's also not to explain the risks associated to Bitcoin. I'm not saying you should sell your Bitcoin, and I'm not trying to dissuade you from buying if that's what you think is best for you. My only goal is to explain why this is not something that aligns with my personal investment philosophy. That's not to say that I would never buy Bitcoin. I actually tend to agree when people say that you should allocate 1 to 2% of your portfolio to other asset classes like Bitcoin, gold, or art for that matter. But what I can say with some certainty is that Bitcoin will never be a central part of my investment strategy. Let's dive right into the main subject, starting with what Bitcoin actually is and how to make money from it. Bitcoin was created by Satoshi Nakamoto. And no, this is not some Japanese super genius developer. It's someone that remains anonymous to this day. The one thing we do know about this person, though, is that they own anywhere from 750,000 to 1 million Bitcoin. At today's price, that would mean that the man or woman behind Satoshi Nakamoto owns $90 billion worth of Bitcoin, or 5% of all Bitcoin in circulation. Now, Bitcoin was created as a form of protest against banks, governments, and fiat currencies following the 2008 financial crisis. And just to clarify, fiat currencies are any traditional government currencies like the dollar, the euro, or the British pound. Unlike any of these currencies that can be printed at will by governments around the world, Bitcoin was supposed to be a different type of currency, one that could never be devalued by governments. For example, governments need to print more money every year in order to fund projects, but also to pay back the interest from the debt they have already accumulated. And that's a vicious cycle because the money that gets printed comes in the form of new debts. So, unlike any other form of currency, Bitcoin is supposed to have a finite supply. And what that means is that there will only ever be 21 million Bitcoins in existence. So, what are the main Bitcoin use cases? Well, for one, Bitcoin has been seen as a store of value. That seems to be the main narrative nowadays. And actually, Bitcoin has been referred to as digital gold. Just like gold, Bitcoin is scarce, and it can be seen as a hedge to inflation because of this scarce nature. It's also durable in the sense that it doesn't degrade over time. And finally, you can have physical possession of it. The same way you can store gold in your cupboard or under your bed, you can keep your Bitcoin in your own private little key called a ledger. And in the heads of some people, that means that it's safer because it's harder for the government to confiscate it. But Bitcoin is not just a store of value, it can also be used as a currency. This is especially true in politically unstable countries where the currency gets devalued by a couple percentage points every day. You know, in some countries, you buy a loaf of bread today, you go back to the same store a week later, and it costs double the price. When you compare that type of volatility to Bitcoin, Bitcoin is a walk in the park. And finally, one cool thing about Bitcoin is that transactions are anonymous and they can happen directly from peer to peer, so from one person directly to another without going through a bank. And this, of course, is ideal for any type of criminal activity. We're now done with all the boring facts, so now we can move on to the actual interesting stuff. How do we make money with Bitcoin? Well, that's easy. You just wait for the price to go up. Duh. But why does the price go up? No matter how you try to dissect this question, the answer always comes back to a variation of one word, and that word is demand. You always hear explanations that make sense, like the use cases are going up in the global south, or El Salvador is loading up on Bitcoin and banks are doing the same. Then it was Tesla's buying Bitcoin and holding Bitcoin on their balance sheet instead of cash. And then after that, it was, whoa, BlackRock and other asset managers are creating ETFs that will allow people to have access directly to Bitcoin, like this one. And the most recent one, it's that Donald Trump will order the United States to invest heavily into Bitcoin in order to become the world's first superpower in Bitcoin. As you can see, all of these things are essentially saying the same thing. More demand equals price goes up. Of course, you can only make money in this way if demand keeps going up. If demand ever softens, then the price of Bitcoin goes down. That's where the volatility comes from. So in essence, it's pretty much the same as any other asset that you can trade. But there are a few other ways that you can make money from Bitcoin without having to sell. For example, you can lend Bitcoin and receive interest the same you would with a normal currency like a US dollar. For example, here on Coinbase, you can see that they give a 4% interest on any Bitcoin that you're willing to lend. Now, I'm no expert in any of this, and I'm not sure what types of protection you would have if you started lending your crypto like this. It's always possible that if the platform went down, you could lose your crypto, but I'm not too sure about this. So if you have an answer or if you know more about this, please leave it in the comments below. But that's not all. There's another way of making money with your Bitcoin without having to ever sell it. According to some experts of the industry, it's possible to borrow money and take on debt using your Bitcoin as collateral. So instead of selling your Bitcoin, you can just take on debt, live off of that, and as the price of Bitcoin keeps going up and up and up, you can take on more and more debt to pay off the original debts and just keep living with more and more money. Now, of course, this implies that Bitcoin will keep going up. So I'm not sure if you'll be able to see this in the video really well. By the way, this is Mark Moss. I'm sure he's a lovely guy. But over here, what he's showing on his model is his projections of the gains that Bitcoin will make every year. Under the gains column, you can see the value of your portfolio. And in the debt column over here, you can see how your debt accumulates little by little over time. Now, under the free cash flow section here, this is the free cash flow that you would be paying yourself from new debt every year as the debt increases. So the total debt increases, you're paying yourself more in free cash flow that's coming from the debt, but that's okay because the value of your Bitcoin portfolio is rising over time. Actually, before I move on to my own investment strategy and why Bitcoin does not fit into it, I just want to acknowledge one genius. This man really cracked the code and found a way to create an infinite money glitch in order to make money from Bitcoin. For those who don't know, his name is Michael Saylor. Remember the name. He is one of Bitcoin's most avid supporters ever. He's quite famous for his strongly opinionated interviews that he gives online, and this is one of my favorites actually. Let's have a look.
If I told you I know how it all ends, right? Once you know how it all ends, that the only use of time is how do I buy more Bitcoin? But take all your money, buy Bitcoin, then take all your time, figure out how to borrow more money to buy more Bitcoin, then take all your time and figure out what you can sell to buy Bitcoin. And if you absolutely love the thing that you don't want to sell it, go mortgage your house and buy Bitcoin with it. And if you've got a business that you love because your family works for the business, it's in your family for 37 years, and you can't bear to sell it, mortgage it, finance it, and convert the proceeds into the hardest money on earth, which is Bitcoin. So what I would say is use all your time to acquire Bitcoin, finance entities and weaker currencies to buy Bitcoin.
Now, of course, so far, Michael Saylor has been absolutely right on the money. He happens to be the chairman of this wonderful company called MicroStrategy, which is up 3,000% in just a few years. The entire purpose of this company is to acquire Bitcoins and place them on its balance sheet. As the price of Bitcoin goes up, so does the value of the balance sheet, and so does the value of the company. What's so genius about that, you ask? Well, it's the way this company goes about financing these deals in order to buy Bitcoin. What they do, as you can see here under the gray line where it says basic average shares, is that they issue shares and dilute the investor base. They use those proceeds to go and buy Bitcoin. And all of the investors are down with it because the price of Bitcoin keeps going up, and so the shares of the company keep going up. Now, as the share price goes up, the company can make more money by issuing more shares to buy more Bitcoin, and then Bitcoin keeps going up. I'm telling you, this is an infinite money glitch, and Michael Saylor is a genius. Now, if you're enjoying this video so far, make sure to leave a like and subscribe to the channel if you like content about investing. Given that one can make money with Bitcoin in all of these ways, and that Bitcoin is pretty much the best performing asset over the past 15 years, why the heck am I denying myself this opportunity? If you go through all the ways you can make money from Bitcoin, it always comes down to the price goes up over time. Just like gold, Bitcoin is not a productive asset. It does not create little baby Bitcoins that will go on and create more baby Bitcoins. If you buy one Bitcoin today, you leave it in your wallet, you don't look again for 20 years. If you come back after 20 years, there will still only be one Bitcoin in that wallet. The price of that Bitcoin will depend on what people are willing to pay for it. If demand has kept on increasing the same way that it has in the past 10 years, then your Bitcoin will be worth a lot more than what you paid for. But if demand has softened or decreased, then the price of your Bitcoin could very well be below the price that you bought it for. This type of dynamic has a name. It's called the greater fool's theory. When you make an investment, the goal is to make more money in the future based on the money that you put in today. Now, there's two ways to make your money back. One is from what the asset actually produces on its own. This can only happen with productive assets like businesses or farmland, or in some cases, real estate. Basically, these are assets that can create economic value on their own. For example, you buy a farm, 20 years later you sell it, but your gain comes from 20 years worth of crops. The other way to make money is to have someone buy the asset from you, irrespective of what that asset will produce over its lifetime. That's called speculation, or greater fool's theory. Myself, I don't want to rely on greater fool's theory for my returns. When I buy assets, I want them to produce real cash flow. I want to have peace of mind. I want to spend my time doing the things that I love, not watching the market and paying attention to market sentiment. I want the assets I own to produce free cash flow by themselves, and I can use that free cash flow for my own lifestyle or to reinvest in other projects or other investments. And you want to know another cool thing about businesses? It's that they don't just create value, they also store it. The best protection against inflation might be Bitcoin, it might be gold, but it's also definitely businesses. Let's say my business sells bottles of wine. In 10 years, if the value of the dollar decreases by 50%, all I have to do is double the price that I'm selling these bottles of wine. And let me tell you, the best businesses, they don't just match inflation, they actually raise prices faster than inflation. And yeah, businesses don't just store value, they also create value. I don't know if we can say the same about Bitcoin or gold. That's why my investment strategy revolves around finding the highest quality companies that I can own forever. What matters to me the most is durability, because the last thing I want to do is to be buying and selling out of stocks every few days, always paying to the market sentiment so that I can time my sells perfectly. What I do want to do is to minimize taxes and fees that come from trading a lot. If the market closes for 10 years, I wouldn't even mind at all. One of the reasons why I choose not to show the price chart on Rated A is because I find it irrelevant. What matters to me is cash flows going up steadily year after year after year. Debt staying low. I don't want companies over leveraging themselves. I want dividends going up over time and shares going down over time. That's what generates real returns, just like what I was mentioning previously with farmland. Valuation is important, of course, and I do keep an eye on that. But that's mainly for when I'm trying to buy a new company. Even when selling, I don't really care about a company's valuation unless it's really, really extreme. What matters to me most is fundamentals. If a company's fundamentals start to deteriorate, that's when I sell. Let me give you an example. Oracle is a company that I started buying around 2021, around this price range. The stock price has performed extremely well. I'm up around 148% on that initial buy. The problem that I see is that now Oracle is extremely expensive. It's trading for a 66 free cash flow multiple. The value rating is not nearly where I would considering a good buy. But because the company is executing on its strategy, revenues are going up and free cash flow and all that good stuff, all the fundamentals are going in the right direction, then I'm not even thinking about selling. So, bringing that back to Bitcoin, what I do not want is my financial future to be predicated on market sentiment. I don't want my investment success to depend on whether Bitcoin adoption will increase, whether governments will buy, whether asset managers will buy, etc., etc. I also don't want my returns to come only from selling the assets that I own. And what I definitely don't want is for my retirement and my legacy to be funded by debt and hope that I never get a margin call if ever the price of Bitcoin moves down. Thank you, Mark Moss. What I do want is to give myself the highest probability of being very well off in the future, no matter what happens. If I live 100 lifetimes, I want to be financially secure in 99.9% of those lifetimes, even if that means giving up gains over the short term when an asset like Bitcoin goes bananas. That's why my investment strategy will never revolve around Bitcoin and why I will always prioritize high quality companies that will fund my retirement and my projects with dividends.